Hey everyone, and welcome to the PivotBoss Closing Report for February 8th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the current session. We had a significant sell-off in overnight trading across the market, really here, the ES, the NQ, and really what you saw was a push downward that extended that range to the downside throughout most of the session. The NQ saw a range of 144% of average daily range. If I show this off right here, you can see basically we had 163 points of range today in the NQ, and it's been averaging 110 points per day over the last 10 sessions. So 144% of average daily range in the NQ, big time move. For the ES, we had 150, basically 149.5% of ADR. So it was even more significant than the NQ, trading 62.75 points of range when it's been averaging now 42 points over a 10 session basis. So very, very important the way this played out. Gold had the biggest day by far with 228% of ADR. Crude oil, very, very quiet, unusually quiet trading session inside the overnight range of just 70% of ADR. So that's what we were looking for today, was how was price going to shake out after that initial overnight sell-off. And what we saw here, well, let's price get into 1846s, which is that CLVN. And I mentioned before that it may not be pretty. It wasn't pretty over here, but it's not where price is early in the session. It's where price closes the session. And even if we do get a sell-off, it's price closes back above 46s. Short term, that could lead to a move back into 1921s here as price continues to develop within this lower range here. So it's not out of the question that we continue lower into 1811s. We could certainly do that. It wasn't an emphatic reversal, but it was a decent reversal here to close the session, and price did close above our 1846 LVN, very similar to what we saw here. What I'll be looking for is how does price trade out basically over the overnight session and heading into RTH. If it quietly comes into perhaps 1837s, we'll look at a lower time frame here. If it comes into 1840, 1839, somewhere in that zone, 38, that could be an area here where bulls defend for a shot higher. Below there, likely leads to further downside price discovery into 1811s. If you look at a wider view here of the ES, you can really see that prices have held generally in this zone for the last 2 years, really. And in the recent period of time here, where the August sell-off here led to this low, we saw a bounce back up, and then we saw this kind of shakeout move before we saw a push up. And that's kind of what we've seen here: sell-off here, a bounce up, and now this shakeout move down. If this shakeout move can hold, we could see a move back into 2071. So it could be very similar. I mean, the market's mirroring this recent range. If you draw a line right here and go this way, 1, 2, 3, 4 months, and then draw a line and go this way, 1, 2, 3, 4 months, you kind of get a mirror image on both sides of what could play out. And heading into April, we could be looking at 2071s. Who knows? So it's just very interesting the way the market's playing out right now. Very calculated. Of course, if price fails to hold above 1800, the thing just kind of falls apart, and now you're starting to look at expansion targets into these zones down below. All right, now let's take a look at the intraday time frame for the ES. You can see here price sold off throughout most of the session. By the end of the trading room session here, we were calling for 1819s as the next target here below, because it was just mowing through our targets all the way down. The most significant of which was the 1829 to 1830 zone. But once price recovered back above that zone, ironically, we saw a significant squeeze all the way back to the open price, where price closed nice right around 1850s. So that's where we are right now. You can see a clear LVN right here, and that's going to be about 1856s. Price really needs to get above that zone, which could encourage a squeeze back up toward 1906s. Otherwise, we're going to be looking to see how this thing pulls back. I mentioned earlier, pullback into 1840 to 1838 could offer an opportunity to defend. If you look to see what the upcoming pivot range may be, we're likely going to have another lower value pivot range scenario, but we could see how that thing shakes out, because again, if this thing pulls back into that zone, we could be looking at a push much, much higher. Okay, now if we take a look at crude oil, here's crude oil. Basically, we had an inside RTH session from the overnight range, so it was very, very mild. I hadn't seen a range like that in a while. But price continues to sit on this ledge here. Very significant, prominent volume ledge between 29.25 and 29.40. Right now, that's kind of the zone where I would expect bulls to continue to defend for a shot at rotating back into 31.80 and perhaps back into 33.43. That's kind of the range right now that we're seeing. If price fails to hold above 29s, we will see a quick move into 27.56 with a shot at seeing full-on expansion into the next two key targets, which would be 24.63 and 21.69. So this is significant here with big-time implications. As a matter of fact, that huge key range here actually forecasts a 100% expansion target into 1582. We know how on the money and accurate those key ranges can be. I'm going to continue to play it and watch as this thing develops, but if this thing starts to see expansion, you know the downside targets will be playing toward. So taking a look at the intraday time frame for crude oil, what you see here is how price played around that 50% key level, very important. We had an overnight key range right here. That's the first thing to mention, 31.38, 29.54. That was the overnight key range, and from there, price just went flat inside the range in a clear trading range day. So that's going to be important here to watch. We also saw the 50% expansion level become very important, 29.72. Price came below it, couldn't hold, and then squeezed back to 30.47. Price attempted to hold it late in the day. You saw another squeeze back to value. So what we're going to watch here is this key range, 30.47 midpoint, 29.57 on the low end, and 31.38 on the top end. Failure to hold this 29.57 is going to put a lot of pressure on that 29.40 to 29.25, and if that zone doesn't hold, look for a big time continuation into 28.36 and beyond. Okay, looking at gold. Gold has been parabolic. It's been about as perfect as we can call it. We were right on the money heading into the beginning of the year. We talked about this narrow range. The upside break here had us looking to defend the first pullback, and since then we stair-stepped our way on up, and a lot of our premium trading room members are actually taking some great advantage of that solid move here through a number of trading vehicles, which is what's fantastic about analyzing something like gold, because you can trade the futures contract, you can trade ETFs, you can trade any kind of associated stock from the industry group. So many different ways to take part of this, but we had it nailed. And the recent squeeze took us right into the top key level here, which is 1192. And typically speaking, when you have this kind of saucer pattern here that develops, it usually rallies right into that previous high from which the thing kind of developed from. So rallying into 1192, that was our key level to watch today, heading into the RTH session, or right after RTH, and you can see right there where all prices above there generally offered today. It was a big time fight, basically a clear trading range that formed on those highs. And we'll see which way we go heading into the upcoming session. But if we see rejection at 1192, the expectation would be a play back toward 1162s and perhaps below. Any movement beyond 1200 targets 1224.90 ahead. All right, if we're looking at the NQ here, lastly, the NQ shows price holding after selling off significantly, holding right there at the 38.93 half key level. That's the bottom of the key range. That's why we saw new lows here beyond the previous lows, because the ES had already tested its August lows, but the NQ hadn't quite done that. So there was unfinished business down below. We've seen a test. We've seen a minor rejection of those price levels below. We know what failed range expansion can do. That could signal a full-on reversal all the way toward the top of the key range, rather the top of the key range here at 45.58. So that could be significant. At the very least, it could signal a move back to the HVN at 40.25 and perhaps 41.31. So, there's implications here. So we have to see how this thing shakes out in the upcoming session, but closing back above the 39.65 key level here, or right at it, is intriguing here. You want to see bulls generally reclaim these prices in the upcoming session for a shot at seeing a move back toward the center of the key range, 42.26. Any failure to hold above 39.65 generally would suggest expansion, and that could get very, very hairy. Looking at the intraday time frame briefly, you can see here prices reclaimed back above the open price 39.43, which was offered throughout most of the day. That's going to be an early pivot to watch in overnight trading. Basically, you have an LVN right here at 39.75 half. Above that LVN squeezes back to 40.25. Failure to get above it in overnight trading opens up a return to 39.41 with a shot at seeing 38.80. All right, that's it for now. Let's see how this thing plays out heading into the upcoming session. Good luck and trade well.